Good morning, Jags. This is Fahad. Today is Thursday, May 28th. How's everyone doing?
Doing good, another day.
Yeah. Hey, Chronicle, we need to work together on your next presentation. I have your slides. Let's find a time when we can get it done, all right?
Sure.
Okay, so by the time we're going to be done with this conversations, the weekly jobless claim will come out at 8:30. I don't know if we'll get a chance to cover it also in this conversation, but I just want to quickly say that the consensus right now is um, is between 1.8 million to 2.1 million. That's the range. So just call it 2.1 million. Prior month was, or prior week was 2.4 million. And so I don't know if it will matter for the market's sake, but I just like to, just point out briefly that uh, these numbers, even after what is it, like 9 weeks since the pandemic has started and all these claims have started to go up, they're still running about 4 to 5 times above the highest weekly peak that we saw during the 2008-2009 recession. And so just understand the size, the magnitude over here. So this number is going to be another around 2 million. But more important thing is that from the perspective of the unemployment report that will come out next week is the continuing claims, which always lag a little bit behind the initial claims just because there are calculations that need to take into account people dropping off after they initially file the claim. Maybe they get their jobs back or whatnot, but then also taking into account the timing difference where a lot of the states are having so much problem in timely filing for the claims and then paying unemployment checks to people. So they catch up. So naturally, the continuing claims, that's the trend that follows the initial jobless claims with a little bit of a lag. There shouldn't be any lag here, but that's what generally ends up happening, particularly at this time. To my big surprise last week was when we saw a huge jump in the continuing claims, much more so than the initial claims by almost 3 million or 2.5 million, which was telling me that there was a major catch up. So this is the line I'm watching. Let's see, we finished last week at 25 million. Let's see where we're going to end up after today's data came out. So because that's going to give us a hint where the unemployment picture is going to be sometime this summer, particularly after May. There's another quick thought on the job side that I want to make, that the according to a lot of the research that I read last night on the macro data, there's a consensus, high level consensus that is starting to form that approximately 10 to 12% of the total jobs that have been lost in this country in the past couple of months are likely going to turn into permanent losses because of bankruptcies, because of simply downsizing businesses to a level where a new recovery is just not possible so easily, and because of many other structural problems that now we have to deal with that takes a long time to come back. So you could get to about 25 to 30% unemployment sometime either in May report or June report, and then potential trending down or improving trend from there. But even if you add all the numbers together, you do your magic calculation and you come up with a number that is reasonable, you will possibly still be in the high teens by the end of second quarter. And if you're lucky enough, by the end of the year, assuming we don't get a second wave and shutdowns or any of that, I think we're still going to be in low to high teens percentage in the unemployment in the country because of a lot of the structural damage that has been done. And that's not going to come back any easy. So put this in context of at the end of the year, if you're at 13, 14%, that's still uh, 300 basis points higher than the peak unemployment that we saw in 2008, 2009 recession. And so something to keep in mind. Anyways, moving on from the macro to specific stocks, I just have today only two technical updates that I want to provide. I shared this chart in Telegram last night, Domino's Pizza, DPZ. And we also discussed that the company provided the update day before yesterday on how its second quarter is progressing. I thought it was very interesting that the company mentioned that their growth from March to April and then from April to May continues to accelerate on a weekly basis. So the big number is that the Domino's Pizza now sees their quarter to date. So we're talking second quarter to date, same store sales growth now being up 14%, which is substantial improvement from the mid-single digit percentage increase that we saw in the first quarter. Now, what does this mean? To put this in perspective, not only we are seeing the improvement in the same store sales growth according to this Morgan Stanley FI that came out this morning, they're also talking about app downloads for various restaurants. And so particularly looking at the category by pizza, DPZ has the largest install base of 43 million cumulative app downloads. I have one of those downloads on my phone too, and I've actually used this quite a few times in the past year or so. And it also has the largest number of app downloads per store of 350 versus, let's say, Papa John's at 270 downloads per store, or Pizza Hut at 200 and such. And so the improvement, the trends continue to suggest that this company, as both of them, Papa John's and Domino's Pizza, are just having a remarkable quarter. Another report that came out from a different analyst was also pointing out that Papa John's quarter to date same store sales growth could potentially be running at this time above 30% year over year. That's a phenomenal number. That's a blowout number. I mean, Jay, you remember when you first started talking about Papa John's last year, and we made this a topic, and we were getting excited about watching the SSS growth go from negative to like low single digits.
Yeah, absolutely. And I would say the former Arby's CEO has been, he knows what he's doing. He definitely knows what he's doing.
I mean, I think SHAK is also on the board. I think he's probably also making a structural changes there. Large ownership
Starboard value is there as well. So yeah.
Yeah, and and the older management, the one that was always regarded as not so friendly to its employees, you know who I'm talking about. I don't even remember his name anymore. The former CEO and the founder, he's pushed out. Here's the thing: Papa John's is only a $3-4 billion company, and I'm wondering if these structural changes, along with the surge in this comp sales growth that we're seeing, could this turn into maybe an M&A story down the road? I mean, that's how things gradually turn from go from worse to better and better, and then ultimately turn into, Buffalo Wild Wings got acquired, and I thought always that stock was very cheap, only valued $3 billion. Panera Bread was a very cheap stock, and that one got acquired. I don't know. There could be consolidation, could be part of that. I'm just speculating over here. Nevertheless, 30% comp growth quarter to date for second, that's just phenomenal. Big bullish engulfing candle yesterday. I think this has more upside. I think this thing is going to go to 85 to 90 in short term. Domino's Pizza sets up for breakout. And the last stock that I want to quickly touch is that I might take a position in Match Group. We discussed this in one of our conversations last week. You can put it up from history and take a look at it. I was very impressed the relative strength in the last 2 to 3 days from Match Group, which is simply when you have the Nasdaq getting completely destroyed, right? Nasdaq was down as much as 200 points yesterday. And before that too, for 2 days, 3 days, we are seeing relative outperformance from value and underperformance from growth stocks. We've been discussing that theme quite a bit. This I considered as a growth stock, right? It belongs in a lot of growth ETFs as well, and yet it did not respond at all to that weakness. And so I think that there's something, I like reading charts like this. I love reading the charts that are showing relative strength. And so this is one of those. A tight bull flag formation, if I actually dissect this much more closely, you will see that this is where we are at right now. So Let's take a closer look. You can see this is the major resistance around 90, but we are just attacking that big hammer reversal candle yesterday, and it's attacking that $87 level. I think if it busts higher from here, 90 is going to be a very easy target to reach. But then on looking at the long-term weekly scale, I think there's a chance that if it busts through this 90, we're going to see 100 very, very quick. So just a quick technical view on this one, like the setup, and we discussed a nice big bullish case for this in conversations last week. So that's it from me. Avo, what do you have?
I'm looking at SHAK this morning, another eatery.
Yeah.
Saw a small, I think it was about a 600 lot June bull. Well, of course it's bullish. June call spread go through yesterday. 60-65 is the strikes. That is what the word I'm looking for. Technically, it has room to the $65 area. There's not much resistance above there. I think it's going to depend on more reopenings, specifically in New York City. So it's worth keeping an eye on. That's all I got.
Yeah, that's there is a major resistance here, but I think the chart sets up nicely. MACD RSI bull crosses, and so if the theme around reopenings continue, who knows? This could also be in play.
And that'll be the main driver, because there are a lot of places reopening, even in New York City, where I believe I read something to the effect of it's going to be left out a little bit to individual restaurant owners to decide what they're going to do. I really didn't get too deep into it, but that's what I'm thinking of. Speculatively, probably this is a speculative play by whoever the trader that entered. It wasn't too high cost, but I think it makes sense.
It's a coil stock, technically speaking. So, whenever something in just a technical school over here, whenever something is coming up to significant layers after layers of resistances, key layers of resistances, not just one, multiple, and it's doing so on high volume. Ultimately a breakout, or on the other side it could also be breakdown, but ultimately a breakout leads through that, and that's when you get power candles. And so this could be one of those moments. So yesterday was nice to see SHAK outperforming the broader market sell-off, particularly in Nasdaq. You can see this confluence of resistances here around $60 per share, the VOP levels, the downtrending resistance, the major just a whole bunch of other stuff. So if it does take out decisively the $60, you have an air pocket all the way to 71. That air pocket from February may get filled. Jay, what's up, buddy?
What's going on? So switching from food to beverages, taking a look at Monster Beverage, MNST. So Stifel was out last night.
Did we just hold on? Did we just all wake up to food categories? I mean,
it could be. I actually looked at Monster as well last night.
Pizza and then burgers, and now we're gonna talk about energy drinks.
Energy drinks, yeah.
Okay, all right.
So,
go ahead.
Stifel was out last night. They raised their price target to 77 from 73. And now the overall takeaway was that they believe, based on IRI scanner data, that from May to June, sales are going to increase 7% versus the 6% decline the company saw in April. One of the things Stifel did was they took a look at the convenience store channel, which, if you did not know, makes up approximately 70% of US sales. They then broke that down into your open states and your closed states. And based on the scanner data, what you're seeing is week over week improvement. So for open states, you have negative 12% to negative 9% to flat to now positive 3% in the last 4 weeks. In the closed states, you went from negative 16 to negative 13 to negative 6, and most recently to negative 1. So ultimately, these should eventually, probably in the next week, turn positive.
Yeah. So both closed and open are inflecting as we speak right here to positive. Interesting.
Correct. And then they also then took a look at the product innovation as well as the competition that they have going on right now. In terms of competition, Red Bull just came out with a product, a summer edition watermelon, which typically when Red Bull releases a new product, it does well in the beginning, but then wears off. So nothing to really worry about there. And then Coke Energy and Bang Energy, these two have been losing market share over the past couple weeks. They said Coke Energy has been down modestly, while Bang Energy has lost 120 basis points. And then finally, looking at Monster's products specifically, they have 3 products, recent products, one called Ultra Rosa, Ultra Fiesta, and then a new coffee offering called Java Monster 300. Basically, these have not gotten the shelf space that they typically would have because of COVID. So this is just another reason that sales should appreciate over the next couple weeks.
Yeah, good stuff. These trends, sequential improvements in food and beverages are definitely something to monitor because these are the easy ones. If you think about this from cyclicality standpoint, considering that we are still in a bear market, high unemployment, and consumer discretionary spending is being affected by many areas, cannot be said about a lot of other places where people spend money, but we're talking food and beverages over here. They're very easy to monitor. They're very easy to, they're less concerning essentially in a time when, for example, consumer could be behaving far differently than some other large categories like capital goods and stuff. So good stuff over there. My only concern here, and you knew that I was going to say this, that this chart does look overbought in short term, right? Technically, it has run quite a bit, gone from 60 to 70. And the volume has been light behind this. Would prefer to see this a bit of a pullback, come down to this maybe $66 major VOP level. So basically do a pullback, retest this levels, and then it gives us a nice technical entry. But on a long term, not even just 5 years, here's a 5 year. This is indeed setting up for a breakout. And it is already breaking out. This is indeed after a long time. The bigger the base, the higher in the space. So who knows? This may have room to run. Great stuff. We're gonna keep an eye on technicals and option activities, and as well as other flows in this one. Chronicle, what's up?
This is not about food.
Okay.
It's regarding Boeing.
All right.
As we all know, the company announced that it would resume manufacturing the 737 MAX at its Renton, Washington factory after a 5-month pause. All things considered, I would not get too excited about this piece of news for several reasons. First off, the company said it would restart production at a low rate as it fights on a couple fronts regarding workplace safety, as well as having to ensure the 737 MAX will be built properly this time around. Meanwhile, just because they're restarting production does not necessarily translate to strong sales numbers. In March alone, Boeing saw its customers cancel a total of 150 planes. And then in April, we saw another 108 cancellations. So that's a total of 260 plane orders canceled the previous 2 months. And lastly, despite resuming production, Boeing announced that it will still go ahead with its plans of cutting 12,000 jobs in the US. So I think management also knows restarting production doesn't translate to strong demand. So there's 2 ways I'm looking at this. If anyone's looking to buy and hold Boeing as a long-term investment, then by all means, this is probably a good price to be picking shares up. However, if we're looking for a trade to profit off the ongoing reflation rally, then I think we'd be better off buying the airline stocks like Southwest Airlines or Delta, which I like. Because if we're talking in rate of change terms, then as the economy reopens, it's the airlines that are guaranteed to see much higher rate of change in revenues and earnings rather than Boeing. And if we look at performances since the whole rotation from growth to value began, the airline stocks have actually massively outperformed Boeing. And even with Boeing restarting 737 MAX production, I think the airlines will continue to outperform Boeing shares in the meantime. Plus, the airline stocks tend to have a higher beta than Boeing as well, which translates to higher absolute returns. So to sum it all up, I think Boeing would make a great investment at these levels because the long-term fundamentals remain intact. But if we're looking for a short-term trade to profit off the economy reopening, I think we're better off buying airlines. And I stress that this is just for a trade because these airlines are not going to return to full capacity right away.
Yeah, I think I agree with everything that you said over there. As a short-term trade, airlines is the spot to go. Long-term, Boeing will be a winner, but could be years out. I mean, I don't know exactly how long it will take this to get to, let's say, even 200. And so we'll be sitting here for a while. I have just a couple thoughts on this one, though. First of all, it's interesting they're reopening the 737 MAX production when they still have, 500 planes parked in their Wichita lot, right? Somewhere they still have to sell that finished inventory. And then they have to sell that finished inventory at a time when a lot of the domestic and international large airlines have grounded lots of their existing fleet. And simply because they have cut down so many routes. So where is the demand? Where is the demand going to come from all of these new planes that they're going to be building? That's the first question. Second question is, I wonder, instead of Boeing, if we do take a shot for something long term as a recovery in air traffic, and frankly, this could be multiple years before this happens. But what about Airbus? Is Airbus a better buy? That symbol, by the way, is EAD as in dog, SY. EADSY. It's the ADR that's traded in the United States. I mean, there's an argument to be made that Boeing still has problems and Airbus is a cleaner one. The A320 and all of those planes are very, very popular. If international travel is going to come back, if European travel is going to come back much faster, maybe Airbus is the one that needs to be, that perhaps we need to take a look at. It's just a general thought, high level. You have any quick thoughts on that?
Yeah, I completely agree. I mean, going into the COVID crisis, Airbus had been doing much better than Boeing as well.
Yeah, I think they have definitely improved their book of running the business with the new order growth as well, relative to all the problems that Boeing has seen in the past in the last 2 years. Anyways, great stuff, guys. Let's go eat some burgers and pizzas and have some chow it down with with some energy drinks. That's it from everybody. We'll see you in the chat room shortly. By the way, weekly jobless claim just came out. I'm not gonna review this over here, but I'll present those thoughts on those later. That's it. See ya.